Oracle stuns Wall Street with a massive AI backlog as oil shocks the market. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The markets took a hit today with the Dow dropping roughly 475 points to 47,230. The S&P 500 fell 27 points to 6754, and the Nasdaq shed about 52 points to 22,645. The Magnificent Seven saw mixed results, with Nvidia ticking up 0.5%, while Apple and Amazon posted minor losses. Energy was the winning sector today, surging nearly 2% as oil prices climbed, while financials, consumer staples, and utilities took heavy losses. Looking at commodities and crypto, Bitcoin held steady near $70,170. Gold slipped 1% to roughly $5,177, and silver plunged 4.5% to $85. WTI crude surged 4.5% to $87 a barrel. The biggest story today was the unprecedented energy shock. The International Energy Agency announced the largest emergency oil reserve release in history at 400 million barrels. However, the market realized this cannot replace the refined products lost from the Strait of Hormuz closure. This harsh reality caused WTI crude to spike, which directly boosted the energy sector while dragging down the broader market on renewed inflation fears. In the tech world, Oracle delivered an absolute blowout earnings report. The enterprise software giant posted a staggering $553 billion backlog driven by massive artificial intelligence contracts. This validation of AI infrastructure demand sent Oracle shares skyrocketing over 9% and helped lift related semiconductor stocks, providing a rare bright spot. Finally, the February Consumer Price Index came in exactly as expected at 2.4% year-over-year. However, investors completely ignored this benign report, viewing it as backward-looking data collected before the Iran conflict began, which caused market sentiment to sour further as traders brace for upcoming energy inflation. The 10-year Treasury yield jumped to 4.21%, while the 2-year yield sits around 3.64%. The US dollar index rose to 99.2, and the VIX volatility index climbed to 25.2. The bond market is aggressively pricing in war-driven inflation, keeping the dollar strong as a safe haven while heavily pressuring equity valuations. The CNN Fear and Greed Index currently stands at 26. This shows fear is driving the market, signaling investor anxiety over the Middle East conflict. Looking ahead, the market outlook remains highly defensive. Analysts expect continued range-bound trading and elevated volatility as Wall Street reprices for a prolonged geopolitical conflict and a higher-for-longer Federal Reserve stance. In the coming days, keep an eye on the Producer Price Index on Thursday, followed by Adobe earnings after the closing bell. On Friday, the Critical Core PCE Price Index drops. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.